right, everyone, buckle up. We're diving headfirst into the Singapore market today.
Always an exciting ride.
You said it. And we've got a pretty interesting lineup, too. We're going to be looking at AIMS APAC REIT,
Okay.
Qiong Hong Holdings,
Interesting.
and just to shake things up a bit, Singapore T-bills.
Sounds good. A little bit of something for everyone.
Exactly. Think of this as your daily market briefing, cutting through all the noise and giving you the info you need.
Yeah.
You know.
Yeah, no fluff, just the facts.
Exactly.
Right.
So let's start with AIMS APAC REIT. Big news just dropped. They're selling off a warehouse.
Oh.
Yeah, at 3 Tucklink.
Right.
For a cool $24.4 million.
Wow. That's,
I know, right?
yeah.
And the kicker is, that's a 32.5% profit over its last valuation.
No, that's impressive. That's a pretty hefty premium.
Exactly.
Yeah.
So what does that tell you about the industrial property market?
Well, it definitely suggests a lot of confidence in the sector. You don't see those kinds of margins if people aren't bullish.
Right.
And for any listeners out there who might not be super familiar with REITs, they're essentially companies that own, operate, or finance income-generating real estate.
Right. So, like, they're the landlords.
Exactly. And in this case, AIMS APAC is showing they can really make those assets work for them.
They sure are. And here's another interesting tidbit. Their units actually closed a bit higher even before the news came out.
Oh, really?
Yeah. So maybe someone got some insider info, huh?
Maybe. Maybe. You never know with these things.
Right. Makes you think. But anyway, the source did mention that they might use the money for reinvestment and acquisitions.
Ah, so maybe they're already looking at their next big move.
Makes sense, right? Cash out on a hot property, then use that money to snag something even better.
Could be a brilliant strategy, especially if they have their eye on some prime locations.
Exactly. All right, so moving on to Qiong Hong Holdings.
Okay. Construction and development. Always a lot going on in that space.
You said it. So their subsidiary.
Now, just to be clear, for anyone who might not know, a subsidiary is basically a company controlled by another company, which would be the parent company.
Right, like a mini-me, but for businesses.
Exactly.
So their subsidiary is selling a 20% stake in Qiong Holdings, bringing in about $34.5 million.
Not bad at all.
Right. But here's the weird part. The share price of Qiong Hong Holdings, it basically didn't move after the announcement.
That is interesting.
You'd think that news like that would cause some kind of a stir, right?
You would, but sometimes the market has its own logic. Could be that investors were already anticipating this move, or maybe they're waiting to see what QiongHong does with the money.
Okay, yeah, I guess that makes sense.
Remember, the source mentioned using the funds for working capital and potential opportunities, so this could be a strategic move to fuel future growth.
Right, they might be getting ready to make a big splash.
Or they could have a specific acquisition in mind. It'll be interesting to see how this plays into their overall business strategy.
Yeah, definitely something to watch. Okay, last but not least, let's talk about Singapore T-bills.
Okay. Safe, reliable T-bills. Always a good option to have in your back pocket.
Absolutely. You know, especially when the stock market's being all, well, the stock market.
Yeah, they're definitely a haven when things get a bit rocky. And we've seen the yield on a 6-month T-bill dip a little. It's at 3% now, down from 3.74% back in June.
Oh, wow. So they're not doing as well.
Well, it depends on how you look at it.
True.
I mean, that's still way higher than the 1% we were seeing at the beginning of 2022.
That's true.
So, you know, still a very solid return, especially if you prioritize stability.
Right, right. So I guess that makes them particularly appealing for, like, retirees who want a consistent return without, you know, having to worry about the stock market roller coaster.
Absolutely. I mean, risk tolerance changes as you move through different stages of life, right?
Yeah, for sure. And it's worth remembering that Singapore has a super strong fiscal position. And of course, the Singapore dollar is, well, it's the Singapore dollar.
Exactly. It's a beacon of stability in a world that often feels anything but.
Yeah, seriously. So that makes Singapore a pretty attractive option for investors who are, you know, a little wary of the global economic situation.
Absolutely. It's like a safe harbor in a storm.
Perfect analogy. So there you have it, folks. We've covered a lot of ground today.
We have.
From a REIT making a savvy sale to a construction company making, well, let's call them interesting moves.
Intriguing.
Intriguing, yeah. And then, of course, the ever-reliable T-bills.
Always a good reminder that there are options for every kind of investor.
Exactly. So what do you think? What stood out to you the most today?
That's a good question.
Yeah.
What do you think?
Well, I think the AIMS APAC sale is pretty telling. It shows there's a lot of faith in certain sectors of the Singapore market, even with all the global uncertainty.
I agree, and the fact that they're potentially looking at acquisitions suggests that this confidence is here to stay. So that's definitely something to watch.
Yeah, for sure.
And how about you? What are your predictions for these companies and the market in general over the next few months? It's a dynamic landscape, and things can change quickly. So it'll be fascinating to see how it all unfolds.
Well, that's why we tune in every day, right? To try to make sense of it all.
Exactly.
Thanks for listening, everyone. And remember, keep exploring, keep learning, and keep those questions coming.
Until next time.